Hi everyone, welcome back to this channel. Alright, Josephat Bezi, and I'm taking you on how to properly manage your risks while trading today. So you're new to this channel and new here, welcome. Alright, here we discuss about every single vital information that could lead to your trading progress and success in your trading journey, both in the forex market and the derivative market. So welcome, you're a returning subscriber. Thank you very much for following us so far, and hope you've been making the best out of our resources and our content. So starting off with our risk warning, as usual, pause this, take a good look at it before continuing, and ensure you fully understand what you're doing. All right, so let's get to it, guys. Risk to reward ratio, R to R, or whatever you put it, whatever you call it. Excuse me. It's simply how much you're willing to risk in anticipation for a return in a trade. It's usually expressed in percentages or ratios as you know it to be. Alright, so we have some here, alright, and we'll be discussing about what they are and why we have some, a risk to reward ratio in green, 2 in black, and 1 in red. Alright, so that's super important, guys. Risk to reward ratio is, I would say, one of the the great pillars you have, all right, in trading. If you do not have it, you could fall anytime. You could be wiped out anytime at any moment. All right, so it's super important. It's an essential part of risk management that you must have a hand on and constantly keep and be on the watch for it. All right, so we have the first one, which is 1 to 1.5. The second one, which is 1 to 2, the third one, which is 1 to 3, and the fourth one, which is 1 to 5. Right? Any one of all these, are risk to reward ratios. Right? You could have your own risk to reward ratio, 1 to 7, 1 to 13, 1 to 18, whatever it is. Now, this simply means that I'm risking 1% of an account in anticipation for a 1.5% return. It simply means that I'm risking 1% of an account in anticipation for 2% return. It simply means I'm risking to risk 1% of my account in anticipation of a 3% return, and so forth and so on. All right, so these are all their various meanings, and that's how you read it. All right, so it's risk to reward ratio. So this is the risk, and this is the reward. All right, so super important, guys. So here you have the very first one in green, because this is the safest, I would say, this is the safest risk to reward ratio you would find, alright, with any trader. Is 1 to 1.5. Why? Because it's I think I skipped the fact that every single one of these risk to reward ratios will make you profitable, and this is the safest in terms of those that will make you profitable. Why? Because people say 1 to 1 is the safest. That's 1 risk to 1 reward is the safest. But the thing that it does not guarantee your profitability. What does is the increase. This 5 here, this 0.5, it really has a lot of power. All right, so super important, guys. This is the safest. Is considered to be the safest risk to reward ratio that can help you to be profitable. This is the second, third, and then this is the most risky risk to reward ratio. All right, considered on a normal level. All right, I would say, because I know we have 1 to 15, 1 to 60, some people even do that, and so forth. But on a normal ground, this is the safest, and this is the most risky risk to reward ratio. All right, so let's get more into details, guys. So here we have sheets of each journal, all right, with 10 simulated trades, all right, with each and every one of these risk to reward ratios. So you have here we have the first one, the very safe one, the 1 to 1.5. Then we have the 1 to 2, then 1 to 3, 1 to 4, 1 to 5. All right, so let's start with the first one and see what happens. So in this case, guys, we simulated a maximum of 10 trades, all right, with 5 losing and 5 winning. That means you have a break even for the month. All right, so you had 5 winning trades and 5 losing trades as well. So there was no, so you have a break even, I would say. Okay, so we have the pairs here, the number of course, the number of trades that we took here. But then we have the pairs here, where the type of order whether is a buy or a sell. Then we have the lot size. We use the minimum lots. All right. Then we have the stop loss equivalent, monetary equivalent of the stop loss, and the same for the profits. The checklist. All these are also necessary here. And then these are the outcomes. Okay. So when you have the one in bracket, that means it's a loss, and you have it count as 0 here. Okay. The wins count as 1 here. You have them there, and this is the total accumulated profit or loss. So you have that to be in this. Then we have 5 losing and 5 winning, and you could see that we're still able to earn a profitable amount with a 2.5 dollar profit, right? And that's pretty awesome because, with like I said, if you're using 1-to-1, all right, you're losing, that means you're willing to risk $1 to make another dollar. If you had 50% losses, that means you have wiped out all your wins. Okay. But in this case, you still have your profits, right, of $2.50 here. Okay, so that's super important, guys. So that shows you that with this risk to reward ratio, which is 1 to 1.5, no matter what happens, even if you have a drawdown, even if you have a break even at the end of the 10 trades, you'll still be profitable. Okay, so that's super important, guys. The second one, is the 1 to 2. Okay, and we follow the same principle again of 50-50. All right, so we have 50% wins, 50% losses. I could see that at the end of the month we're still able to end up with a $5 profit, and that's pretty awesome as well. So moving on, we have the next, all right, here, which is still the same thing, 1 to 3. And you see that we have much more profitable. And the last one here, we have, I think here we have 60%. 1, 2, 3, 4. Here we have 60% wins, right? And you can see what our returns of that. Okay, and this is the thing. Every single, if you follow your strategies to the word, to the letter, and ensure that you follow the rules and as requested of it, all right, you should. I think a proper strategy should be above 70% profitable. All right, so that means simulating this on 50 is I think the maximum you can get to. All right, and exactly the maximum you can get to, and so forth. All right, so that's it, guys. You can see the difference, all right, of having a risk to reward ratio from the most risky, all right, on to from the safest story onto the most risky. All right, and you can see that in all of these occasions, all of these situations, we end up profitable even at a break even. All right, and that's super important, guys. So you are using a strategy, you are using something, for example, a system to trade, and it's not quite profitable. Do well to backtest your strategy. Go back to the demo, backtest it, ensure that it's profitable when you follow all its rules and regulations, or the entry rules and setups as that is due. All right, and if it's profitable, check out the percentage of profitability you have from it in a span of 2 months, for example, in a span of maybe let's say 40 trades, for example, on it. All right, and then you could make use of a good risk to reward ratio while you're making, of course, those entries and so forth. And this will actually amplify your rate of profitability, because each time you lose lesser than you win. All right, so remember, our risks are constant. We do not have 5 here, we do not risk 5 here and then 6 here and so forth. No, we have a constant risk always and a constant reward always. All right, and there's this greedy feeling and so forth that comes up in trading psychology, which we will discuss about later. But people have at times there is that thought of, okay, let me just let me get a bit greedy here, and then they lose it and so forth and so forth. So please ensure to keep your risks constant, all right, and your rewards constant. It's better to grow one step at a time than to try and jump not knowing where you will land. That's super important, guys. So please ensure you do that. So make the right choice today. Don't let it pass you by again. All right, a lot of people have amassed massive losses, lost a lot, all right, due to this simple fact, a risk to reward ratio that they cannot maintain, all right, and make use of a proper risk to reward ratio. At times, I know the problem might not be from your risk to reward ratio, it might be from your strategy and other things, all right, but over 80% of the time it's usually risk to reward ratio, because if you have a strategy that's a bad strategy that is maybe about 50% profitable, you'd still be able to make profits with these risk to reward ratios. So do well to make the right choice today. All right, don't let you pass this by. Don't let this just pass you by, as it has always done. Once again, all right, do well to put yourself into questioning. All right, if you be having consistent losses, things are not going so well, or you're even new to this risk to reward ratio of the thing, or you're new to the market and so forth, do well to put this into high consideration. All right, because risk management determines more than 70%, all right, of your success in trading. Is what reserves a seat for you, a seat for your account on the market for you next time. All right, so you do not have a proper risk to reward ratio, it will be quite hard for you to be profitable. So that's super important, guys. So leaving you with a quote here: someone is sitting in the shade today because someone planted a tree a long time ago. This was said by Warren Buffett and put into quotes by Blair Quotes. Right, so that's super important, guys. Plant your tree today so you can sit in the shade tomorrow. All right, super important. Risk management cannot be overlooked, it cannot be undermined, it cannot be underestimated. You have to deal with it as appropriately deal. All right, so do well. You do not have a proper risk to reward ratio right now. Pick one of these that we discussed. This is the safest. You could start from this, and from time to time, if you see that okay, I'm quite comfortable with that, then I could decide to advance. Then you could decide to go to the 1 to 2, then 1 to 3, then 1 to 5. All right, and even higher. All right, but do well to maintain your risks always. Maintain it always. All right, super important. And I hope to have positive comments, all right, on the effect of this in your trading journey. So thank you very much for following us in this video. Happy to have you. Choose here, and have a nice day. Thank you.